All right, let's go. Here we go. All right. Right shoulder breaking to the upside, NASDAQ. So last night I took my short NASDAQ off and turned it into long NVIDIA. Yeah, I know. I've seen many stories get hyped beyond fair values to extreme levels when the market wants to get hold of it. And if something's seen to be inflation proof, big earner, there's no way it's going down. I mean, it can go down because everyone owns it, but I think there's a lot of people left to buy it. And I think they'll hype it a bit more. It's still not my biggest position, and it's tiny, but that's the change I made. So I took half my short off, which wasn't very big compared to my long metals, but I converted half of my short into a long NVIDIA. So my short, I'm sort of long NVIDIA, short NASDAQ, if you like, on part of the book. Now there was a very interesting graph on the front of Zero Hedge today, and I've been watching this for a long time, but where is it? Here. This graph here, I mean, it's behind the paywall, so you can't see it. But this graph here is showing you the red line is the net interest payments of corporates as interest rates go up. And I mentioned this before, if you're Apple or you're NVIDIA, if you've got a lot of money in the bank and interest rates go up, you're just earning cash. You're earning interest. You're not paying interest. So any corporate that has a lot of money is just cleaning up here. And I think that's the final thing that splits the market. I think the people are going to get slaughtered are debt holders. Debt is going to get slaughtered, and non-debt, i.e. hard assets, are going to explode. Silver, gold, NVIDIA, fuck it, Apple, you know, and particularly if these tens, I mean, they're giving a little bit of relief, right? They're not collapsing. I think they're yet to collapse, but if they start to really break, and if the rate market starts to soften to help all that out, then you're just going to get everything bought. Which I've always thought was the case, which is why I like gold. But I thought that equities would suffer under the spending slowdown. But I think the breadth just keeps getting narrower and narrower. I mean, the overall index may not go anywhere. Overall index may not go anywhere. Overall index may not go anywhere. But it's gonna get narrower, and you're gonna get a lot of things going nuts, and you're gonna get a lot of things going broke, which you've already seen, right? The market's already telling you that's happening. Just have a look at ARK versus Microsoft, right? And this effect's just gonna keep going. That effect. Now, the slowdown could take over. Like, smartphone sales are in the toilet. But then Apple says, oh, well, we've got services going instead. Yeah, maybe. But a name like Nvidia, I'm not a fanboy. I'm not going there, right? I'm not saying you should buy this stock. I'm just saying the idiots are going to run it harder. That's all. And that can fall in a heap on any day of the week. But if you have a look at the right shoulder of the NASDAQ, it's breaking higher. You know. Hang on, I've got to write this. NASDAQ right shoulder looking compromised. I think we go. But I think the beneficiary is metals. Now I don't like it. I've been short here, but I haven't been carded on it, and I'm not short anymore. So it's totally fine to see this happen. Now, Aussie dollar can't go anywhere. It's a dog. I mean, the China story just keeps looking terrible. Copper's coming to life. Copper, oil. Oil, I called it. Hang on. Oil continues to look great. All right, so we've got data coming now. Is it out? Not quite. Hang on a second. 5-minute mark. How long we got? 8 seconds left. Data. Go. Yeah. Whoop. Here's your dovish data. Let's go have a look. Jobless claims. Continuing claims. Whoa. Sticky inflation. Not sticky enough. Not sticky enough. Spending up, income down. Wow. Price index up a little bit. Core PC price index, yep. Bit sticky. Ugh. All right. Oh, where's my music? I feel like some synthwave tonight. I'm a bit sick of all this chilled stuff. Let's go with the synthwave, hey? Oh yeah, there we go. All right. That's better. All right. All right, what do we got here? Okay. Metals look all right. All right. There's a bit of back and forward going on here. I think the Fed wants to sit 400 points behind the curve. Yeah. Hmm. Yeah, I can see the Fed wanting to do that. Stay deliberately behind the curve, so you can keep inflating out of your debt. Keep the rates a little bit up to stop stupid malinvestment. But overall, but don't break anything. Depends on how far these commodities run. Oil. All right. I don't know if I can do an hour of this tonight. Here we are sitting at no moves. Good volumes again, metal markets. Fucking monster volume in these. Volumes are weird. I'm going to go and have a look at stocks again at NYMEX. What do we got? Oh, come on. Where's my... Here it is. Let's have a look. Stocks. Silver stocks at NYMEX. What do we got? It's been hovering around 27. Oh! Oh, but that came out of the eligible. 277. Okay, so they're got enough for delivery. Something's going on though. Let's have a look. There's 277, right? Yeah, 271. And then today, 277, yeah. Actually got an inflow. 234. And the eligible, it's up to 242. So registered went down. Yeah, it just moved from registered across to eligible. I mean, eligible to registered. A little bit went in, got delivered. Alright, so anything that was setting up positively before the market's now turned over. And there's quite a bit of volume trading on that data. More than usual. More than fucking usual. Man, these volumes are enormous. There's a lot of volume trading here. I don't know what that means. I don't know if it means anything. You got a lot of volume, but nothing moving. A lot of volume traded on that data. A lot of metals. Fuck. That's a lot of volume for that data. A lot of volume traded on that data. Fuck does it mean? No, Silver giving it up. No, still, it's not very big moves. Crazy. Alright, I'm not going to sit around and wait for the open tonight. I can't do it. I can't do it. I'm going to just do a little bit of admin, some other stuff here that you cannot see. Where does his 10s go? I mean, to get back to 436, take another fucking week. Oh. There is not a lot of setup here. UBS had good numbers. So financials might be okay, which they are. Pre-market, nothing's that great. What do we got here? Peabody Energy's done alright. They reported or something? Or was it just with oil going better? Copper's coming good. Oh, shit, I didn't know that. Now that's an interesting. That futures, silver futures are starting to get a bit far ahead of the spot. Now I don't like that. I don't like that. Don't worry, it's contract roll. It's a contract roll. Relax. Relax. Oh no, that's headlines. Yeah, I don't like this. Not usually a good sign. If if we compare this to the chart, usually matches up with tops. Fuck. That better collapse pretty soon.
I did not see that yesterday.
When does the contract roll? Oh, hang on. No, it's just a contract roll. Relax. It happened on the 27th of April. Is it the 27th? 29th? Okay, relax. It's a contract roll. Yeah, it jumps up at that at the end of the month. Okay, so it goes up, comes down. See the shape here? This is your funding coming in for the month, right? So because you've gone out, your front month is now a whole month longer. So you got a fund for a month, and then it just gradually comes in over the month. And then you go to a new month, and it comes in. And you can go to a new month, and it'll grind in a bit. So it's not that the futures have been manically bid. But with funding creeping up, of course, you've got to have higher futures value. Headline. Oh, silver's come good again here. Yeah, right. I don't know. I think everything's going to go nuts. Just fucking buy everything. No one cares. They inflate. They don't stop inflation, but they don't be stupid. They stay behind the curve. Good companies go nuts. Shit companies that can't pay their debts go under. I mean, this is what interest rates should be doing. Oh, here you go. Silver's positive. Look out, boys. Buy everything. Because the rates are behind the curve, everyone knows it's a slow motion default, right? So as soon as the Fed sits deliberately behind the curve, it's a slow motion default. You're just going to lose your money over time. I just don't think 4% on a 10-year bond is enough. I mean, it might be, given the size of the debt. I mean, that's an enormous interest. That's an enormous interest rate to hold. And they finally take it in the currency. Let's have a look. DXY. Up. Alright, I'm not going to sit here and just mull this until they open. I'm going to jump. Catch up. Bye.